Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Budget Department is looking to lower the limit of unprogrammed appropriations to around 3% of the national budget. The Securities and Exchange Commission eases the minimum free float requirements of large IPOs. And in a year of macro and policy risks, banking on earnings and visibility to drive up the PSE index to 6,800. Unicapital Securities' Peter Garnace joins us live. The Department of Budget and Management is looking to lowering the cap on unprogrammed appropriations to as low as 3% of the national budget. Budget Secretary Rolando Toledo says lowering unprogrammed funds has been raised to him both during budget preparations and deliberations in the legislation process. However, he clarified this is still subject for approval by Congress. To make this happen, the DBM seeks the passage of the proposed Philippine Budgeting Code, hoping that it will cover provisions on budget preparation, monitoring, and even citizens' participation in the budget process. Unprogrammed appropriations have been the subject of public scrutiny as the country tackles corruption scandals involving public infrastructure projects, particularly those involved in flood control. Senate President pro tempore Panfilo Ping Lacson has filed a bill seeking to grant an amnesty on unpaid estate taxes. This covers estates of individuals who died on or before December 31st, 2025, with outstanding or accrued tax liabilities as of that date. Lacson said this bill authorizes a one-time opportunity for estates of decedents to settle outstanding estate tax liabilities at a uniform rate of 6%. This measure is designed to convert unrealized tax exposure into immediate fiscal inflow and allow the Bureau of Internal Revenue to redirect enforcement resources toward current compliance efforts. The Securities and Exchange Commission has eased minimum public ownership rules for large initial public offerings, a move that could open the door to mega IPOs in the country. Under a new memorandum circular, the SEC adopts a tiered free float system based on company size. Firms planning to list with a market capitalization of over 50 billion pesos must now offer at least 15% of their shares to the public, with a minimum offer size of 10 billion pesos. That's lower than the previous across-the-board 20% requirement, but higher than the earlier proposal to cut it to 12%. Firms valued between 1 billion and 50 billion pesos must maintain a 20% float, while smaller companies face higher thresholds of 25 to 33%. For exceptionally large listings worth at least 200 billion pesos, regulators may allow a float as low as 12%, subject to safeguards. The adjustment comes after market turmoil in Indonesia linked to tightly held shares as regulators balance attracting big listings with protecting liquidity and investor confidence. Stocks are starting 2026 with scars from weak growth, policy noise, and corruption scandals. Yet Unicapital believes this could still be a year of recovery. In its latest report, When the Dust Settles, Unicapital sets a 6,800 target for the PSE index, banking on earnings growth, infrastructure resumption, and more accommodative monetary policy. Joining us to break down that call and where they see opportunities is the equity research analyst of Unicapital, Peter Garnace. It's good to see you again, Peter. Welcome back to the program.
Hi, Cathy. Good morning. Thanks for having us.
All right, so let's start with the title. You called this outlook When the Dust Settles. It's quite conditional, but in concrete terms, what is the dust in the Philippine story right now? And what tells you that this year is when conditions stabilize rather than deteriorate further?
Right. I think our title, When the Dust Settles, reflects more of like a market that has gone through governance noise, infrastructure delays, and valuation compression, and it is now moving into more stabilization period. In terms of the macroeconomy, we want to put it this way: the noise has been loud, but the fundamentals are stabilizing. The current situation is more of like a deja vu of the 2011 corruption scandal during the Aquino administration, where infrastructure spending tightened and dragged down the overall economy. But what follows, that is a gradual recovery in the economy, and that's exactly what we are expecting. We
And
do
in fact,
continue to
your
see
base
opportunity.
case has GDP growth recovering toward the mid 5% area this year. And that's because of the resumption of the infra projects and improved policy execution. So, what are the two clearest signs then that you're seeing that would support this recovery narrative?
Yeah, right. Our target for the GDP for 2026 is at around 5.2%, and this is actually backed by a 1.3 trillion infrastructure spending of the government to restart and also to improve governance. We do think that policy clarity plus infrastructure spending is a powerful combination. At the same time, we do think that inflation is contained, giving the BSP more room to cut rates, which is a meaningful tailwind for consumption and investments.
So, let's say,
In the near term, yeah,
right,
growth may still feel constrained, but the bigger picture is improving.
if those assumptions falter, and it's pretty conditional and nuanced, say infra is delayed again, or maybe confidence doesn't come back, what is the realistic downside band for growth that would force you to revisit the rest of your calls in the report?
Well, yeah, in terms of our index, so we are targeting a base case in terms of the PSEI target at 6,800, and that's largely driven by earnings growth of around 10% or low teens, and a modest re-rating of around 10.5 times PE. Meanwhile, our bear case, this is assuming growth disappoints, inflation resurges, and rates stay higher for longer. We are seeing the index to be at around 6,200. So in terms of our bull case, our target is at around 7,200. So this assumes more rate cuts from the BSP, inflation stays tame, and sentiment improves faster than expected.
Let's
So
take a
even
look
if
at that
our
base
even in
case.
our bull
It's really
case,
interesting that we're
yeah.
seeing a bit of an uptrend there. Taking a look at that green block in the chart, that's exactly where you're expecting the PSCI will be for the full year at 6,800, which really implies low double-digit upside from the close of 2025. So walk us through those key building blocks of that particular number, the earnings growth that you're penciling in, and the valuation multiple that you're willing to pay.
Right. More on the base case, we do think that it will be driven by more of a double-digit earnings growth still. We are projecting 10% EPS growth for our base case, and our modest re-rating to 10.5 times PE multiple. But even if at 10.5 times PE, it's still below the historical average of the PSEI. So we do think that at the current valuation of the market, risk reward is still skewed to the upside, because we think that the pessimism is already priced in.
If we take a look at the earnings out so far that you're seeing in key industries, maybe from banking to utilities, which sectors do you think are doing the heavy lifting in this earnings story? Is it mainly the banks, consumer, or infra and utilities?
Yeah, we do think that currently utilities utilities have outperformed the rest of its peers, and we are actually overweight on utilities, REITs, and even consumer staples, while we remain selective on the exposure to structural growth opportunities, more on the renewable energy and consumer discretionary.
Well, if we take a look at the policy side and pull up the chart, it's very interesting that you make a mention of monetary conditions as increasingly accommodative. But that kind of environment that would promote this view that you have of 6,800 are implicitly built into the constructive view on equities. So what can you tell us about what we're seeing and where you see rates going to support your view?
Right. Well, in terms of inflation, we forecast inflation to average at around 3.2% this year in 2026, and this is still within the government's target band of 2 to 4%. With inflation being firmly anchored and comfortably within target, the BSP we believe has more room to cut rates, probably be another 25 bips in the next in the second half of this year. So this should ease financing costs for both households and corporates alike. So with lower rates, it means a relief for consumers and oxygen for earnings. As borrowing costs come down, consumption and investment should gradually pick up, helping offset the last year's slowdown in public spending.
Well, let's take a look at where that oxygen falls into the stocks that you have. Because you describe your recommended positioning as defensive yet opportunistic, could you just give us one example profile of, say, a defensive name that you like and one structural growth profile that you would buy in pullbacks?
Well, yeah, I think in terms of one of our picks in our dividend basket would be Meralco. It just recently released its earnings, full year earnings, and it actually surpassed its guidance of around 50 billion in core net income. And although this was in line with our expectation, and this is really largely driven by its power generation segment, it has really drove the earnings of Meralco. And we do believe that Meralco do still have some upside opportunities. And as we know, Meralco, everyone needs electricity, consumes electricity, and we do see some drivers still moving forward for the utility company, given that it is really expanding organically and inorganically, given also that it will also energize, or it will roll out more power plants in the upcoming years. So we do like the likes of Meralco, Aboitiz Power, also MWC, Manila Waters, also among our picks, given it is really there's really growth in this stock, given we think that it has opportunity to acquire or to enter into more JVs in the future. Recently, it acquired Wawa JV Co, although it's an affiliate of Manila Water, but we do think that it can also acquire more or enter into partnerships with LGUs to provide bulk water services and even water distribution services. So these stocks we believe would be quite defensive. So with with the lingering uncertainties, if volatility stays, income wins. So our dividend basket, just to provide more context, it was built on stability and yield, offering an average of 5.6 yield for 2026. And this is comfortably above the 2-year benchmark rate and heavily weighted towards utility, REITs, and complemented by selected telcos and banks, sectors with visible cash flow and defensive characteristics.
What about the structural growth profile that you'd buy back if indeed there was a pullback?
But yeah, I think in terms of structural growth, we are seeing some names in the banking sector as well as the property sector. We have included RLC as well as China Bank in our dividend portfolio. We do think that with the recovery in the economy, with the cyclical recovery in the economy, these stocks would also benefit from the economic recovery.
And we're just talking about the risks and the opportunities here locally. What about those overseas? Like, say, the biggest risk that you think is most underpriced right now. Do you think it's geopolitics, maybe the trade imbalances, or global rates? Or is it still the corruption noise here and the recovery from that?
Right. We do think that still the lingering uncertainties in terms of the tariffs as well as geopolitics are the main or the key risks that we have to take a look at moving forward. And that's also the reason why we continue to have a defensive stance in the market because we think that in this volatile market, being defensive pays well.
Just as a final point for investors who've been underweight in the Philippines since the last sell-offs, when the dust settles scenario plays out, what do you think they will regret missing out this year?
We think that confidence is the key factor that we are taking a look at, and it has been quite weak for in the past few months, but it is slowly recovering. We think that the recovery will be gradual, and we do actually see foreign funds coming back to the Philippines. And just recently, they have become net buyers to the tune of around 20 billion or around $350 year to date. And this is actually a turnaround compared to over 50 billion pesos in net foreign outflow last year. And we believe that this foreign inflow is largely due to global funds rotating out of the crowded AI trades and more into the undervalued markets like the Philippines with valuation re-rating opportunity. And we see actually this is a sign of the Philippines is entering into the global EM radar screens of our global investors.
All right.
And also, yeah.
In other words, don't miss the boat. Thank you so much for that detailed report. Really appreciate your insights. Peter Garnace of Unicapital Securities. And you're watching Money Talks. Coming right up, U.S. President Trump highlights what he called a roaring economy and plummeting inflation in the State of the Union address. And after 4 decades, Marks & Spencer is set to leave the Philippine market by May. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. A Doha, Qatar-based firm is looking to invest up to $3 billion in the Philippines in sectors like tourism and healthcare. Its CEO also says they're on the hunt for trophy projects here. Ray Vicente has the report.
At least $3 billion. That's what Qatar-based JTA International Holding is looking to inject into the Philippines in high-growth sectors like tourism, healthcare, and technology. JTA CEO Amir Ali Salami traveled to Manila this week and said they want to invest in trophy projects in the country.
Prestige is very important for branding and for any company, I think. If you ask the people from Dubai, what do you have? We have Burj Khalifa, the tallest tower in the world. Okay? We want to have some unique projects in Philippines. The first tech city in Asia. We want to investment in unique projects, trophy projects. The tallest, the first, the biggest.
Right now, the company is assessing the feasibility of 4 projects. One is a Silicon Valley-type technology hub stretching between Mexico and Angeles in Pampanga to be developed with local telco provider Converge ICT solutions. Others include developing a tertiary hospital outside Metro Manila, as well as 2 5-star hotel complexes in Mactan, Cebu.
5-star hotel with 4 condominium units and resort. And another one is 5-star hotel, resort, and casino. These are located in Mactan. A tertiary hospital with complete diagnostic center. And another one is a tech center, for example, the Tech Hub is about 2 billion bid.
Salemi said these 4 initial projects could generate up to 10,000 jobs. The global investment firm aims to start at least one project by the last quarter of 2026. But the paperwork takes a while because it goes through approvals in Doha.
You have to really assess and evaluate, then go to these places and submit my recommendations to Doha. And there in Doha, it will be reviewed by the business development department, then transmitted to the review board. The entire thing takes 3 to 6 months, the approval process.
Despite the Philippines' economic setbacks, Salemi believes in the potential of the Filipino market.
Important thing, in your country, people are very, very kind. And it's the main thing I want to invest here because I like your people.
While the projects are estimated to be around $3 billion, PCCI's Mangyo said the final amount is still subject to change, as additional projects on energy and transportation were also proposed to JTA. Kapatid Ray Vicente, we are One News.
In a few hours, the confirmation of charges hearing of former President Rodrigo Duterte resumes in the International Criminal Court at The Hague. The third day of the hearing will focus on the submission of merits from Duterte's defense. The 3-session proceeding will solely be given to the defense to present their evidences, testimonies, and other legal arguments. ICC's pretrial chamber also granted Duterte's request to waive his right to be present at the annual detention hearing on Friday. This means the former president will officially not be attending any ICC hearing this week. Duterte is facing 3 charges of alleged crimes against humanity rooted on his administration's war on drugs. In other news, U.S. President Donald Trump has used the State of the Union address to tout what he called a roaring economy and plummeting inflation. The nearly 2-hour speech comes as his economic approval ratings decline ahead of the 2026 midterm elections. Trump declared the economy is roaring like never before and took credit for what he said was the defeat of inflation, comparing his record with that of former President Joe Biden.
Incomes are rising fast. The roaring economy is roaring like never before, and our enemies are scared. The Biden administration and its allies in Congress gave us the worst inflation in the history of our country. But in 12 months, my administration has driven core inflation down to the lowest level in more than 5 years.
Among other takeaways from his speech, a proposal of government-backed retirement plan for workers without employer matches, with up to $1,000 annual contribution through an existing tax credit program set to begin in 2027. Trump also renewed his call to ban large institutional investors from buying single-family homes, saying housing should prioritize families over corporations. He largely kept his focus on domestic issues, with brief remarks on Iran. Democrats voiced protests during the speech, though disruptions were limited. The address lasted 1 hour, 47 minutes, and 40 seconds, beating his own previous record and overtaking Bill Clinton's 2000 speech, which lasted 1 hour and 28 minutes. It is now the longest State of the Union on record. And checking in on the markets, U.S. equities rose Wednesday on optimism that NVIDIA's outlook could reignite confidence in the AI trade. The Nasdaq led gains by about 1.25%, the S&P 500 up by about 0.8%, and the Dow climbs by 0.6%. NVIDIA shares rose 1.4% ahead of its earnings release, along with results from Salesforce and Snowflake. Benchmark 10-year Treasury yields ticked up to 4.047%, and gold prices climbed to $5,206 per ounce. As for U.S. futures, they're pointing to slight declines when the markets open later tonight Manila time. The Dow and the S&P are down by about 0.2% each, and the Nasdaq lower by 0.25%. Let's take a look at the Asian markets, extending gains this Thursday. South Korea's Kospi rises by about 2%. Australia's ASX 200 climbs 0.7%, and Japan's Nikkei 225 gains 0.4%. And a look at our own markets. PSEI openings this Thursday higher by about 0.1%, 6,622. The benchmark index climbed past the 6,600 level Wednesday for the first time since January 2025, rising by over 1% to close at 6,619, supported by a stronger peso and positive corporate earnings. As for the Philippine peso, it opens this Thursday slightly weaker, 57.555 to the dollar. The currency hit a 5-month high yesterday, closing at 57.51 against the greenback amid dollar weakness linked to tariff uncertainty. And the 10-year government bond yields ticked down to 5.9308%. And here's a quick look at today's top corporate developments. Meralco posted a record performance in 2025 with core net income rising 12% to 50.6 billion pesos, driven by stronger power generation and steady distribution earnings. The company is cautiously optimistic for 2026 as it awaits contributions from new solar and energy storage projects. Meanwhile, Jollibee has climbed to 5th in the world's strongest restaurant brands, according to Brand Finance. The fast food giant also saw its global brand value jump 32% to $3.3 billion, signaling stronger international presence and consumer preference. And British retailer Marks & Spencer will exit the Philippine market. Its local operator SSI Group says all stores will close by May 2, ending nearly 40 years of operations as the company shifts focus to brands aligned with evolving consumer trends. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.